We hear this refrain every single quarter, that it's not about this season, it's about the guidance, but particularly this time around because people are questioning if that 10% growth rate for 2020 can hold. And we are starting to get early evidence that analysts are saying, well, probably not. Last week, we saw more than 80% of companies beat estimates on earnings. However, at the same time, if you look at that dollar value for EPS estimates in 2020, we saw analysts trim that by roughly $1 to $178.40 a share. What that decline amounts to is a half percentage point decline, and that is the largest for any week going back all the way to January. So what does that mean for the growth rate then? Everyone was talking about growth above 10%. Well, now we have slipped below that. If you look at that column for 2020 full year EPS estimates for growth, it now is at 9.7%. I also want to point out the fourth quarter numbers for next quarter, or the current quarter that we are now in as well. Well, that's now below 2%, a long ways from the hockey stick that we are expecting earlier on in the year. And also, just to broaden out, compare the U.S. with the rest of the world, take it back to your lead-in to the show. If you look at earnings estimates for the S&P 500, they have been on the decline. That is the blue line. The white line is earnings estimates for emerging market companies, which has been on the way up. So that also brings you back to the topic. It begs the question, are we seeing a trough in growth overseas, and maybe can that potentially precede a trough in U.S. growth as well?